Thank you for tuning in to another edition of the Vulcan Report. This is the gold spot chart that you're looking at right now. It looks like this is under accumulation right now. Looking at the chart patterns, yesterday's trading for Monday was a big black candle occurrence. This is bearish as prices close significantly lower than they open. If the candle appears when prices are high, it may be the first sign of a top. If it occurs when prices are confronting an overhead resistance area, the long black candle adds credibility to the resistance. Similarly, if the candle appears as prices break below a support area, the long black candle confirms the failure of the support area. During the past 10 bars, there have been 4 white up candles and 5 black down candles for a net of 1 black down candle. During the past 50 bars, there have been 21 white up candles and 28 black down candles for a net of 7 black down candles. Currently, the market pulse is positive since it's trading above its signal line. The pulse scan crossed above the swing VIX 1 period ago. We have currently a breakout buy entry point at 1213.28. Initial target is 1237.21. Stop and reverse 1178.66. Possible breakdown reversal is at 1178.25 with a profit target of 1152.05 and a stop and reverse at 1210.59. In addition to that, the trend channel is up. This means that positive momentum is entering the market. We expect sideways to higher prices within the next 3 to 5 days. A note of caution, the swing VIX is above 29. This is where it usually forms resistance. The swing VIX usually forms resistance before the underlying security. A buy or sell signal is generated when the swing VIX moves out of an overbought oversold area, and the last signal was an overbought sell 5 periods ago. The swing VIX does not currently show any failure swings, and the swing VIX and price are not diverging. Since the swing VIX crossed its moving average, gold spot price has decreased 0.63% and has ranged from a high of 1208.33 to a low of 1183.98. Currently, the trend is very bullish and pointing upward, and the current market condition also is very bullish. Gold spot is trading above its long-term, intermediate, and short-term moving averages, quite significantly, I might add. Volatility, gold spot closed below the upper band by 20.9%, leaving 27.33% wider than normal range. So volatility right now is remaining neutral. Also, out of fairness and out of disclosure, I'm doing this video rather late. I had a late night last night and I just couldn't get to it. But like I promised, I like to give you the raw data regardless of whether it's before or after the fact. In this case, it's after the fact, but I'm still giving you yesterday's information from the system regardless of that. So in all fairness, let me also show you what the gold spot is doing right now as I do this video. It's trading above the initial entry point already, as you can see right here. Right now the spot just hit 1217.57 and has pulled back to 1216.32. So it is under accumulation. You can see it is bullish, and the 52-week high is in play right now. If we can manage to get there, this could be quite substantial. A close above that, and I think it's like 1222 or something like that. I can tell you right now. Give me just a second. Let's go back. All right, that's going to be 1226.31. If the spot today can close above 1226.31, it will set up what we call a new pulse wave. And if that new pulse wave occurs, then that means there's no limit at that point, and gold can go as high as the sky. There's really no limits. It just depends on if people keep accumulating the metal or not. If they do, then of course the sky is the limit. So right now it's under accumulation. I still hold to my overall belief, because there's so much Ponzi scheming going on that and shenanigans with the central banks and what have you. I still believe that at any time they can crash the prices of everything simultaneously, and that's futures, Forex, commodities, stocks, everything. They can crash it all if they want to, just to prove a point. And don't forget, the central banks do have an overwhelming monopoly on the precious metal because they have been accumulating the physicals for decades. So don't get it twisted. I believe that they're running up the price to make themselves even richer. So the price of gold skyrocketing to $5,000 an ounce or $10,000 an ounce is not necessarily a good thing for the average person, because remember, you can't collect enough coins. You really can't. You can't collect enough coins. You can't. There's no way you can catch up with the central banks, who actually own all the physicals and all the bullion and all the gold that was in Fort Knox. Remember, every nation on the face of the earth is indebted to the central banks. The central banks have been on a shopping spree of foreign countries for decades, and they've pretty much just about wrapped up all their purchasing with the euro situation, and they already bought the U.S. So I still see collapse coming across the board. So I just want to throw that out there as notes of caution. Trade it, but don't marry it. When and if the time says to get out or to sell short, you have to do it. Right now, it's saying to accumulate. So because this is under accumulation, we're pirates. We have our own opinions and beliefs and speculations and predictions, but at the end of the day, we have to trade the chart. The chart is going up, we buy. When the chart's crashing, we sell short. Right now, the money's on the long side, on the buy side. All right, moving on to silver. Okay, here you have a chart of the silver. Let's just run through the technicals real quick. During the past 10 bars, there have been 5 white up candles and 3 black down candles for a net of 2 white up candles. During the past 50 bars, there have been 21 white up candles and 27 black down candles for a net of 6 black down candles. The market pulse is positive since it's trading above its signal line. The pulse scan crossed above the swing VIX 1 period ago. Just like gold, we have both long and short entry prices we're looking at. On the long side, that's a buy at 1885 with the initial target of 1931 and a stop and reverse at 1807. On the short side, looking to get short at 1794 with an initial target of 1751 and a stop and reverse at 1874. The trend channel is pointing upward right now. This means that positive momentum is entering the market, so we expect sideways to higher prices within the next 3 to 5 days. The last signal was an overbought sell 22 periods ago. The swing VIX does not currently show any failure swings, and the swing VIX and price are not diverging. Since the swing VIX crossed its moving average, the silver spot has been unchanged and has ranged from a high of 1863 to a low of 1818. Currently, the trend is pointing upwards, and the market condition is very bullish. Likewise, silver is trading above its long-term, intermediate, and short-term moving averages. As far as volatility, silver spot closed above the upper band by 25.4%, leaving 37.77% narrower than normal. So the volatility is neutral right now. As I write this, let's see here, silver. Here's the silver metal. As you can see, it's flat, man. The range is 1851 high, 1839 low. And total inside day here. As far as Monday's trading is concerned, it's trading inside of Monday's bar. So not a lot of movement there, even though we saw that gold is rallying. Let's go ahead and show you gold one more time. All right, here's gold. And here's silver. Okay, this is gold here, and this is silver here. As you can see, like I said, gold and silver have been decoupled. They're not moving together. Here's gold rallying. Here's silver doing nothing. And as you can see, we don't have an entry price triggered yet in either one. So there you have it on the precious metals. Stay tuned, more videos to come. Thanks for tuning into the Vulcan Report, and remember to rate and subscribe to the videos. Rating and leaving comments, of course, helps Helps the videos, helps get the Vulcan report out there. And you can also tune into the blog to get a transcript of the video, along with a PDF file of the chart, so that you can take it home, study it, do whatever you want to do with it. And thanks for your support. Be encouraged and have a great day.